Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Paid Inc.'s latest report, and let me tell you, it's a bit like a roller coaster, some ups, some downs, and a few unexpected twists. Are they making money or just making promises? Stick around to find out. If you're interested in more videos like this, make sure you hit that subscribe button and join our Discord community. The link is in the description below. So Paid Inc., company that aims to help small and medium businesses with things like website creation, payment collection and shipping, has released its financial results for the first 3 months of this year. The big question is, are they growing, shrinking, or just staying afloat? Let's break it down. First off, this is a Form 10Q, which is basically a quarterly checkup for publicly traded companies. It gives investors a snapshot of how the company performed over the last 3 months. It includes financial statements and management's explanations. It's like a report card. But instead of grades, we're looking at dollars and cents. Let's jump into the numbers. First, a quick look at their assets, things the company owns. Cash and cash equivalents, what they have on hand, decreased to about $751,000. This is a decrease from December when they had about $1.3 million. This means they spent more money than they brought in. Accounts receivable, which is money owed to them, increased a bit to about $28,700. This is a decrease from December when they had about $1.3 million. This means they spent more money than they brought in. Accounts receivable, which is money owed to them, increased a bit to about $28,700. This is a decrease from December when they had about $500,000 since the end of last year. Scrolling down, we see items like property, intangible assets, and operating lease assets. Things that are used long-term went down slightly. A key asset here is the notes receivable, sitting at about $4.46 million. These are essentially loans Paid Inc. has given out, and they're counting on getting that money back. A notable number that we'll talk about later. Now, let's check out the liabilities. What they owe, accounts payable, bills they need to pay, came in at $1.1 million. Accrued expenses, things they've used but haven't paid for yet, are at about $48,000. Contract liabilities, money they've been paid for work they haven't done, is roughly $318,000. This means they're holding a decent amount of money for future services. Looking at long-term liabilities, deferred tax liability is $421,000 and uncertain tax positions are another $370,000. Adding it all up, the company owes a total of about $3 million. Now onto shareholders' equity. This section details how much the company is worth to its shareholders. They have common stock, a bit of additional paid-in capital, accumulated income from currency adjustments, and importantly, an accumulated deficit of $69 million, meaning they've lost a lot of money over time. Alright, let's dive into the income statement, which shows how much money they made and spent during the quarter. Total revenue was around $4.37 million. Now let's look at cost of revenue, which means how much it costs them to make that money. This is about $3.35 million. That's a gross margin of 23%. Now for operating expenses, salaries and related costs were about $583,000. General and administrative expenses were about $525,000. A line that stood out to me is share-based compensation. This is how much they're paying employees in stock, and it was very low at just $1,267. Taking other expenses into account, total operating expenses reached $1.17 million, which resulted in an operating loss of $159,000. Ouch! Looking at other income, they made $10,356 in interest. This wasn't enough to pull them into the green. They ended up with a net loss before taxes of $148,773. The bottom line, their net loss was about $49,000, which works out to a loss of 0.20 RTN. $70 avale ab 2 cents per share. Ouch again. The cash flow statement shows how cash moved in and out of the company. Cash used in operating activities totaled $470,000. They didn't spend anything on investing activities. From financing, they generated around $2,000 more than it was at the end of last year. The statement of changes in shareholders' equity shows all the transactions that affected the company's ownership. They issued some common stock for bonuses. The notes to the financial statements give us more detail on how they came up with those numbers. One key thing they mention is their ability to continue operating as a going concern. Basically, can they stay in business? They acknowledge they've been losing money, which raises doubts. One really interesting item is the notes receivable. Paid Inc. made a secured note to Embelex, and the note has been amended, extended, and is now worth more than the initial investment. There's a lot of detail on the interest, penalties, and repayment terms, but the important thing to understand is there's substantial uncertainty about when Paid Inc. will be repaid on this note. Breaking down revenue by segment, most of their money comes from shipping, coordination, and label generation around 99%, followed by e-commerce services at a bit over 1%. Revenue from client services has decreased. Now, putting this all together, Paid Inc. seems to be facing some serious challenges. While revenue has increased slightly, expenses are also up and they're still losing money. Their cash position has decreased, raising concerns about their ability to continue operating. The big risk is that note receivable. If that money doesn't come through, they could be in even bigger trouble. It seems their strategy of helping small businesses with an all-in-one platform isn't quite paying off, or not at a level that can offset the expenditures required for operations. The increased focus on e-commerce and shipping shows potential, but they need to seriously cut costs and collect on those notes receivable. Overall, Paid Inc. feels risky right now. While they have some good ideas, the numbers don't lie. They need to turn things around quickly or face some tough decisions. I'd stay cautious about this one. Alright, that's our deep dive into Paid Inc.'s latest filing. What do you think of these numbers, and what do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hit that like button and subscribe for more corporate deep dives. Don't forget to check out the Discord in the description and join the community. Thanks for watching, and I'll see you next time.